So today we're going to be looking at several different Vanguard funds that I'm personally invested in and then how I look for different funds. So if you're interested in this, definitely stick around. It's going to be an interesting one. Hello fellow wealth builders and welcome back to the True Financials channel. As I just mentioned, we're going to be looking at some Vanguard funds. But first, if you are new here, my name is Dennis, and on this show we love to talk about personal finance, investing, and retirement to help build your wealth. So definitely consider subscribing today, and don't forget to hit that little bell icon to get notifications when new videos and live streams go up. So I am very excited to make this video here today. I know a lot of fellow wealth builders have been asking for this for a while now. So this is hopefully going to be something that you guys might be interested in. I know it's going to be a little bit of a longer video, but I promise you're going to get a lot of value out of this. So first and foremost, if you haven't already checked it out, I did make a video and I'll link it up here in the cards up above about actually what I currently have as far as funds in my retirement account for Vanguard. So you can check that out after this video is completed. So you can actually see that what I'm talking about is actually what I have done already and what I plan on continuing to do in the future. And of course, by no means am I a financial advisor. So make sure that if you have questions that I possibly cannot legally answer, definitely check with a CPA, or even if you can, call Vanguard and see if they can help answer those questions. But all other questions, let me know in the comment section down below if you have any. So a question for you to answer in the comment section down below: how do you feel when it comes to investing for retirement? Are you comfortable? Are you uncomfortable? Do you know nothing about it? Let me know in the comment section down below. I definitely like to hear from you guys in the community to see where we're kind of sitting at. If we have a lot of people that are maybe uncomfortable with the idea of investing because we maybe don't understand it as much, and hopefully this video can kind of help curate a little bit of that fear to get to a point where maybe you can start investing a little bit for your future. Okay, so we're gonna go ahead and jump here onto the computer. Now, first and foremost, as I mentioned, this is of course just for entertainment purposes, and this is how I look at mutual funds. So this is with Vanguard, who I'm a huge fan of. I definitely love their overall system, how they work it, and I will still, as I mentioned in a previous video, actually create a video talking about why I chose Vanguard over a lot of other brokerage accounts because of some of the different things that they offer and how they communicate with me when it comes to being able to achieve the different goals that I want to achieve for my future. So what we're going to be doing is we're going to be looking at 3 different funds, so that way we can kind of get an idea of what they have to offer for you. Now, this of course is not an advertisement or a sponsorship from Vanguard. So as I mentioned, this is how I personally look at funds when it comes to making decisions on where I put my money. Now, some of these funds are going to have certain types of minimums when it comes to the deposit, so you might not have enough to be able to start that, but in the future I will be talking about ways to kind of get started for investing, so that way you can actually get it transferred over to something such as Vanguard. And I'm a big component of that too, because I'm doing that with my wife's retirement, where right now she doesn't have enough money to get it transferred over to Vanguard, but we're having it grow to a point where we can do that. And again, we'll talk about more of that in the near future in a separate video. So the fund that we're looking at right here is called the Vanguard 500 Index Fund Admiral Shares. So it's under the initials of VFIAX. So that way, if you're ever curious, you can go and check this out on your own when it comes to doing additional research, because you always want to do extra research. You never want to just go based off of what one person says or what one person does. You always want to kind of curate all the different options that you have and see what works best for you, because everybody's just a little bit different when it comes to their style of investing, their style of saving, their style of their personal finances. So right over here, you're going to be able to read the summary if you'd like, so you can go ahead and take a pause on there and read it. But overall, this is going to be a domestic stock because we are here in the US, so that is considered domestic. So in the category, it's in the large blend, and that's usually for like bigger companies such as like Walmart or Amazon, things that have already kind of settled in and kind of have their place in the market. Right here, you're going to see the expense ratio, and this is very important when it comes to your overall wealth building, because this expense ratio will dictate how much you're going to actually be able to earn based off the expense that it's going to cost you to have those funds. Now, it's not usually something that you're paying out of pocket. It's usually the amount that you're earning that they end up taking from you for the expenses, so you actually don't have to pay anything out of pocket for those. So just keep that in mind. But the expense ratio on this is 0.04%, which right here it says that it's 96% lower than the average expense ratio for similar holdings. So that's just kind of giving you an idea of how much is going to charge you. And we're going to go into a little bit more detail here down the road in this video. So you're going to see here the minimum to invest in this fund is $10,000. So as I mentioned, this one is going to have a higher minimum. Other ones on Vanguard have a little bit lower, but of course, you know, some of them will have that higher number. Now, as I mentioned, there are going to be ways where you can start investing somewhere else and actually get that money transferred or rolled over for you. So investing $10,000 is not going to be as easy as starting to save smaller amounts every single month and building up to that amount and actually having it rolled over for you. So now what we're going to do is we're going to kind of scroll down over here a little bit, and we're going to see some numbers here. Right over here, you're going to see the risk potential. Now, risk, of course, is going to be kind of based off with reward. So the more risk you have, the more reward you get. The less risk, the less reward you get. So that's usually pretty typical. You're going to hear that a lot. So based off of their own reference, when it comes to risk on different funds, this one is at a 4, which of course means it's a little bit of a higher risk. It's not the average at 3. So you're going to have more risk, but you are going to end up potentially getting more reward if you stick with it. And as we continue to scroll down here, we're going to have some pieces of information that you're going to be able to see. So one of my favorite things to do when it comes to looking at funds is looking at long track records. Because for me, I like to be able to see long term where they came from and potentially where that means it's going to go as far as that fund. So over here, this just kind of gives you a little bit of information, but we're going to go ahead and jump into the next tab that actually gives us a lot more detailed information. So this hypothetical chart over here shows that if you had $10,000 put in back in 2008 and then left it alone and everything reinvested, you'd be sitting probably around $23,952.54. So now we're going to go ahead and go into the next tab over here. So we're going to see where it says price and performance. So this is going to kind of give us an idea of what to expect when it comes to that. Now, keep in mind that just because a fund did something before doesn't mean it's going to do it again. But historically, overall, when it comes to the market, it always ends up going back up. Can't predict that, you know, the market's always going to be going up. There are going to be downturns, and we talked a little bit about that in the last video where I showed you guys my retirement account and how there was like ebbs and flows. It kind of goes up and down. But this one actually is going to be a little bit more in detail, and you're going to see that here in this chart down below as we continue going on here. So over here, you're going to see some additional numbers. Right over here, it says the historical prices on the last couple of days. And then over here, you're going to see a 52-week high and then the 52-week low. So this kind of gives you an idea of kind of where the medium range is for this fund and what you can expect from it. So if there's a large gap, that means there's either a lot of growth or a lot of decline, and that's very interesting to know because then you can look and see, you know, what's causing that and what's happening. All right, so this is that growth that I was telling you about, where if you left that $10,000 in for the 10 years, how fast it would grow and how much it would grow. But then there's also these time periods that you can kind of condense it a little bit to the 5 years, to 3 years, and even the last year. So if you had $10,000 1 year ago and then you wanted to sell it off today, you'd be sitting around $11,434.57, give or take, of course. And that just helps kind of give people an idea of how this fund continues to grow. And of course, like you see here, you'll see that dip. So as we go back to the 10 years, you're going to see that dip happening more often. So as we keep going up, there's always like a little bit of a downturn. So if you understand that that does happen when it comes to funds, when it comes to the stock market, you're not going to be as worried or freaked out when that does end up happening. So you're going to have ups and downs. You can see this up right over here. That was actually at the end of December, and then this downturn was January, February, March, and then it started going back up at the end of April and beginning of March or beginning of May. So, and that was of 2018. So as you can see, that's going to be like a hypothetical if you had that $10,000 in that account, which is a good amount of growth right there for you. And then you're going to see down over here, where it says, 500 index fund. In the last year, it got 14.35% return. In the last 3 years average, it was almost 11%. And then the 5 years, it was almost 13%. And then in a 10-year cycle, it was almost 9.13%. And then since its inception, which was back in 2000, it has earned about 6.09%. Now, like I mentioned, one of my favorite things is looking at long term. So I like the fact that in the last 10 years, we're seeing some really good growth, and it's pretty on par with the S&P 500, which is where it's kind of benchmarked. So that way they have an idea of how they're doing overall. So that's a really good indication of how it's going and potentially where it's going to go to. As I mentioned, it's not a guarantee, but it is really good information to know, so that way you can expect certain things. All right, so the next area over here is going to be portfolio and management. Now, this is one that a lot of people don't go into, at least from what I gather. So in the portfolio and management, if we scroll down over here, you're going to see a little bit more information over here. It's going to be talking about the price per earning ratio. It's going to be talking about price and book ratio. I'm not going to get into that. That's a lot more information to get into. There are some great videos out there that you can check out, and if I do end up ever getting time to make a video about those, I will definitely do that as well, so you guys can understand a little bit more of these sections over here. But I want to kind of keep going down here so I can kind of get to the more basic stuff so it's a little bit easier to understand. Over here, the 500 index fund for Vanguard, this is going to be kind of giving you an idea of what they're invested in when it comes to the actual funds. So for example, you'll see healthcare over here is 13.9% of the actual funds in this account. Real estate is a total of 2.7%. Energy is 6.3%. So you kind of get the idea. It's kind of dispersed into a couple different sectors in the market. And then over here, you're going to see month-end 10 largest holdings. You're going to see the different companies that they are being held in. So of course, you got Apple, Microsoft, Alphabet, Amazon, Facebook, all these different companies. These are some of the biggest holdings that they have from up here. So you can look at that and kind of get an idea of what to expect from, this fund based off of what the biggest holdings are, because these are going to account, obviously, as you can see, for 22.3% of the total net assets in the actual fund. So if you're looking on here and you're not a big fan of a lot of these companies, or you don't feel like these companies are going to go anywhere, this might not be a fund for you at that point, because you can say, well, okay, I'm not a big fan of a lot of these tech companies because maybe you don't feel like they're going to be going, in the positive over the next couple of years. So you maybe want to hold back off, because that's a lot to be invested in just based off of what we see here on the top rankings when it comes to holdings. All right, so the next area here is going to be a little bit lower down here. Now, this is, like I mentioned, I love long track records, and so this is what I really like to also check out too, is the management of the actual fund. So this will actually give you a breakdown of some of the information for this fund. This will actually give you an idea of who's running the fund, how long they've been running it for, and how long they've been with the company, and a couple little pieces of information that you can see here. So over here, you'll see Donald Butler over here. He is going to be managing the fund. He's actually been advising the fund since 2016, so not a very long time when it comes to this fund, but he has worked in investment management since 1997, so that gives you a really good indication that this person has been in it for a very long time. Now, I'm not the biggest fan of it only being a couple years into the fund, but obviously, based off the track record, even the last couple of years have been doing very well. And then you also see down over here, Michelle Louis has been advising the fund since 2017. So again, not a lot of time, but has been working in investment management since 2011. So a good amount of time in investment management, but not a lot of time, of course, in the actual advising of this particular fund. But with the holding of Donald over here, has been doing it since 1997 as far as overall investing. That gives a lot of boost in confidence when it comes to making sure that somebody is managing that fund. But again, not a lot of time as far as them managing that fund. So if we go back up here on that little price and performance over here. So if we look even just in the last 3 years, we can kind of give an indication. Since he's been there since 2016, you can see, a good chunk of growth has come from there. So it looks like they're doing a good job as far as being able to manage that fund. So if you're comfortable with that, you can continue, investing in there, or, actually starting the investment. All right, and then the next tab is going to be fees and minimums. So over here, you're going to see the expense ratio for this fund is 0.04, and then as I mentioned earlier, it's going to tell you what the average is as well. So this one averaged at 0.95 across the board from different brokerage accounts. And over here, it's going to kind of show you what you can expect over the 10 years, investing $10,000, how much that's going to save you. So that will save you over $2,060 based off of how much other companies charge you when it comes to being able to manage a fund, very similar to what they have. So as I mentioned earlier, the minimum investment for this one is going to be over $10,000. So I know that is quite a bit, but the nice thing is after you have that initial investment, to do any additional investments, it doesn't require any other minimums besides that dollar. So you can invest, as much as you need or as little as you can after that fund has already been started with that $10,000. The next up is distribution. So this is going to show you the dividends and capital gains that you have for the fund over the quarters and over the year as well too. So you can read into more of that information when it comes to earning dividends on certain funds, because some of them do and some of them don't give out dividends. And then the last tab over here is going to be news and reviews. The interesting thing about this is you can actually go in here and sometimes they'll have news for you based off of certain companies that are in that fund or even the fund itself. So that way you can see where the ups and downs might be coming from. So a lot of times if they give you news articles that talk about some of the top holdings in that fund, that can give you an idea of why maybe that fund is going up or down if you're not 100% invested in what those companies are doing. So for example, this fund has Apple as the number one holder. That will kind of give you an indication, because if Apple's doing very well and they're having great quarters and they're announcing new products and the fund's going up, there's a good indication that Apple is really drawing that fund up. Or if they're doing really bad or having bad quarters, and your fund's going down, there's a good indication that it might be from some of those top holdings. So sometimes they'll have some news articles in here that you can actually check out and kind of help you have a better understanding of where everything is going. So that's going to be the Vanguard 500 index fund. As I mentioned, the ticket number is going to be VFIAX, so you can check that out on your own, do additional research on that. And now we're going to go check out two additional ones. I'm going to go a little bit faster on these now that I've gone through all the tabs, but just to kind of give you an example. So this one right here, the Vanguard Explorer Fund, this one is definitely a lot more aggressive when it comes to investing because it is definitely a lot higher risk, and you're going to see that here in just a moment. So this one is also domestic stock, and you can see here it does say more aggressive. You'll see here in the categories section, it's actually considered small growth. So these are small companies that have potential to grow really big in short amount of times and have a really good return on investments. But of course, with more reward comes more risk, so we always have to keep that in mind. The minimum to invest in this one is actually $3,000, so it's a lot less. And then we're going to go ahead and continue going into a little bit more information here. So as you can see here, yeah, the potential risk is at the highest level, which is a 5 for Vanguard here. And just to kind of skip around and jump, because like I said, we already kind of went into the more detailed information before. You're going to see right over here, if you had $10,000 invested in the 10-year period, you would actually have $26,327, give or take, on that estimated $10,000. So that's some really good growth over that time period. And you're going to see here the Explorer Fund, when you compare it to the Russell 2500 Growth Index, which is, again, a benchmark, so that way they have an idea of, if they're doing better or worse. In the last year, they grew over 25%. The last 3 years was 11%. The last 5 years was averaging 13%, and then the last 10 years was over 10%. And then since inception of 1967, they averaged 9.48%. So that's really good when it comes to growth. But again, not every single year is going to be a positive. There can be negatives when it comes to your actual growth. So one of the biggest things I wanted to mention, as I talked about, the other one didn't have a long term when it came to the person that was managing the fund. So on this one over here, when we scroll down, all the way here towards the bottom. This one, I know they've been doing it for a while here. So over here, we're going to have the two investors. So James here is going to be the principal of the investment. He's actually been advising the fund since 2012. So as of recording, this is 2018. So he's been doing it for quite a long time. He's actually been investing in management since 1996. So he's been definitely doing this stuff for a long time. That 2012 number actually really makes me feel very comfortable. And I'll show you here in just a moment what I mean by that, back up on the chart. And then right here, Binbin, it looks like they have been advising the fund since 2010, so even longer than James. And they've also worked in investment management since 1998. So again, a lot of great experience in this fund over here. So when we go back up, since they've been part of this for such a long time, when we look at that 10 years, they've been in this for a majority of the actual growth here. So if you look, even give or take around over here, you're going to see that huge growth. Obviously, there was a downturn over here, but then the growth continued to move up. And if we go to the 5-year period, we can see that information in just a little bit more detail as well. So yeah, downturn over here, it looks like in early 2016, late 2015, but then of course the growth continued up forward. So obviously they knew what they were doing when something didn't go right because of that experience, or assuming because of that experience. So that's always a really great thing. And that's my favorite thing to look into, because not only is the track record for the 10 years on the performance over here important to look at, but then also who's actually managing it and how long they've been doing it for. Because if they've had a 10-year track record that's been fabulous, but the person just started managing the fund in 2018. That doesn't give you a great indication of how that person's going to be able to manage the fund, just more so how the fund actually managed over the last 10 years. So something to look into, a little bit more information on that, because I feel like that's really critical, and it makes me feel comfortable knowing that somebody's been in here for a majority of the last 10 years and has obviously done a really great job of being able to manage that fund in a great way. Over here in the portfolio and management, we go back into this tab. Over here, just like in the last fund, it'll kind of tell you the percentage of where these funds are invested in. But unlike the original fund that I was showing you earlier, look at the top 10 over here. So these are actually going to be most companies that you probably haven't heard of or don't even know about. Because these, as I mentioned, are smaller companies that are looking to grow very big in a very short amount of time usually. So the top 10 holdings are actually only 8.3% of the total net assets. So they're not as indicative of the fund and how it's running versus the other one, because the other one had a larger percentage of how it was growing over time because of those companies that actually are larger companies and have more of a foothold on the growth. Obviously, some of these smaller companies can go down, and that can hurt the fund a little bit, but as you saw, the overall growth over the last couple of years has really indicated that the people that are managing the fund are doing a great job of picking out these smaller companies that have potential for really large growth. You can see here on the fees and minimums, the Explorer Fund investors is going to be 0.44 expense ratio, with the average of similar funds being at 1.23%. So investing over 10 years with $10,000 would save you about $1,735 in comparison to the other ones. And I know that might not seem like a lot, but over the course of years and decades, that does add up, because that is your money that will be reinvested to continue to grow and move forward and help build more of your wealth. So that one is going to be the Vanguard Explorer Fund investor shares. The ticket number for that one is VEXPX. I think I forgot to mention that at the beginning of going to this one. And then the last one we're going to check out here is going to be the Vanguard Growth Index Fund. And the ticket number for that one is VIGAX. So this is the last one we're going to check out. Again, we're not going to be too long on this one, just because we kind of already went over the majority of the details here. So again, this is going to be domestic stock. It's going to be large growth. The expense ratio is 0.05, and then the minimum investment on this one is $10,000. So if we go to the price and performance, we can look at some of the different pieces of information. This one, the 52-week low and the 52-week high, we talked about it from the first fund. So the potential growth of $10,000 over the last 10 years. As you can see there, it's fairly similar to the last one. It's about $26,578 of growth. And then over here, you're going to see what the average return is for this growth index in a comparison to the benchmark of the Split Growth Index Fund. So right here, you can see the last year it grew over 17.38%. Then the last 3 years, 5 and 10 years, over 10.27%. So that's some really good growth over there. If you go look at the portfolio and the management over here, if we kind of scroll down towards that management, because we talked about that before. So this one right over here is really awesome. So Gerald is awesome. He's been advising this fund since 1994. So keep that in mind. So even if you look at the 10-year track record, he's been doing that well past that 10 years. So that gives really great confidence in his decisions and his ideas of where he wants that fund to continue going. And the other person, Walter over here, has been advising the fund since 2016. So definitely not as much time, but he definitely has Gerald in there as well to help, make those decisions. And I think somebody being in there since 1994 gives me a huge boost of confidence that this fund is going to continue doing very well over the course of time. And if we look at what they're invested in, you'll see here in the top 10, actually take a hold of over 33% of the total assets. And some of these are somewhat similar to the very first fund, which was the index fund, because we got Apple, Amazon, Alphabet, and Facebook. So you'll see a couple different companies here in the top 10, not necessarily saying that they're not in the other fund, but they're not in that top 10, so they don't have as much power of moving this fund. But you'll see a couple of these names that you might recognize, like Home Depot, MasterCard, Netflix. So these companies, of course, are also very big companies, not as big when it comes to making sudden movements, unless you're looking at Amazon, of course, making those big types of purchases and improving their foothold when it comes to what they're invested in. So for this one, as I mentioned earlier, the expense ratio was 0.05. The average for similar funds was 1.08. And again, that's so important because that's your money to be able to continue to grow and get reinvested in as well. that minimum is still pretty high over there. I believe with most Vanguard funds, they are sitting around 3,000 or more when it comes to minimum investments. So just make sure you kind of consider that. If you're wanting to roll over, you can definitely, talk to them if you have enough money to be able to do that. Like I mentioned before in my other video, when it comes to doing the 401k rollover, which I'll link up above here for you to check out after this one is done. They did a fantastic job of rolling my money over. Very easy. Didn't take a lot of work to get that done as much as I thought it would be. So I was very pleased with that as well. So that is going to be going into some detail when it comes to the Vanguard shares. I know it's not really the most entertaining or exciting stuff when it comes to investing, but I feel that if people take the time to learn about them and take away those fears that they might have when it comes to actually investing for their personal futures, they will be much better off financially and being able to build wealth for themselves. So hopefully you got a lot of great information out of this video. If you did, please hit that like button because it definitely helps this out, and then share this out with anyone on your favorite social media site if you feel they can get some benefit out of this video as well. And if you have any questions you'd like help answered, definitely leave them in the comment section down below, or if it's a little bit more personal, you can email me. And as I mentioned, I didn't go into full detail with everything because there's so much when it comes to investing, but I feel like if you just start with the basics, that can give you a really good leg up when it comes to getting started. So I know there might be some people, mentioning that there's some stuff that I skipped, but you can either add that in the comment section down below very politely, so that way you can pass on some of that information as well, and help the Wealth Builder community to continue to grow. So if you enjoyed this video, do not forget to hit that like button. If you are still new here, do not forget to hit that subscribe button, and thank you so much, fellow Wealth Builders, for watching, and have a great day. All right, if you made it to the end of this probably very long video and you like to continue binge watching, I have 2 more videos for you to watch. The top video is going to be my most recent release, and the bottom video is going to be the one that YouTube recommends for you if you'd like to continue watching.